Ali Patterson. On this episode of Fintech Finance, we're taking a look at big data and how to deal with this vast amount of information. For this, we catch up with Intix, KBC, SEB and Finansinspektionen. So firstly, we headed off to Belgium to speak with Intix to talk a little bit about what they do to help banks.
Yeah, indeed. So as you said, there is a lot of evolution going on. There is an evolution also in the sense that banks risk to be disintermediated, looking at things like PSD2 with the new entrants coming away. So what you see, and I see that with my own kids, is that their let's say the customer experience that they expect from a bank is totally different of what we or our parents at the time were expecting. You see that also in the fact that we are not physically going to banks anymore. We are expecting everything to be real time, online, immediate. And today what you see is that banks need to prepare themselves for that. Well, prepare actually is a bit late. They really need to be there. So with our technology, what we tend to do is to ensure that at least in creating the customer experience, so the visibility of what a customer is doing with a specific bank, so that we can actually deliver that data in a real-time way across the different platforms to an end customer, whether it is an individual or a corporate.
Over in Sweden, Mackenzie caught up with Paula Da Silva from SEB to talk about how they're using big data to help with transactional services.
Well, we are doing both exciting things and really boring, but maybe the most important things. One is, of course, having a data lake that we use for all areas of the bank and trying to educate ourselves of how to use that, what kind of information you can get out. Most of it is not going to be useful, and you need to kind of segregate it out in terms of what is of value to us and our customers. So that's still in the kind of technical world. We are tagging everything and so forth. But then there is another work that is in the old world, which is cleaning our databases, basically, our customer database, everything else, so that you don't have to put in, humongous amounts of data into the new data lake that actually adds no value at all. So that gives us a simpler world to live in, both in our legacy world and in the new world. So in that sense, we are putting quite a lot of effort into cleaning that up, so that in the new world we only have what is valid today and not the legacy we've had here for a long time.
Over in Ireland, Mackenzie caught up with KBC Ireland to talk about some of the challenges that they're facing in the industry.
Yeah, sure. Well, certainly would see probably 4 themes of challenges. The first is one of customers' expectations, because these are now being benchmarked from outside of the financial services sector. So customers, as they deal with non-financial brands every day of the week, are now assessing us against the experiences that they enjoy with those other non-financial brands. Probably the second is one of consistency. So we must deliver a seamless customer experience irrespective of the product, channel or service type that the customer is enjoying. And it is not only at that particular moment of truth, but right through the customer life cycle. Data is also a challenge. So we now have the customer behaviours, insights and analytics to enable personalisation. But yet, how do we ensure that we balance that with the customer's privacy requirements and demands? And then finally, it's a catch-all really, and that's the pace of change. So customers' behaviours, expectations are evolving so rapidly that how do we in financial services keep pace with those changing requirements?
Over in Sweden, we caught up with Uldis Cerps from Finansinspektionen to hear about the effect that this vast amount of data will have on the industry.
The use of big data can have a lot of positive effects on consumers' possibility to use their information to get even better financial services which they need, or to get cheaper financial services, or to build on the data to satisfy different needs. At the same time, it's a balancing act, because you have also a concern for personal data privacy. So the regulation has to strike a balance on the one hand between protecting the data privacy. On the other hand, it has to strike a balance between offering all the services that you can build on the amount of data that's been accumulated. That's one important balancing act. The other important balancing act is, of course, that you have to strike a good balance between the existing firms that already possess the data and the incumbents on the one hand, and all the new startups that have different good ideas that can be built upon the data which they do not have, but which consumers possesses. And that is where we come into another trade-off that the regulators or the legislators have to make. It is how to regulate the access to data. And for the time being, we are, I think, experiencing a very important paradigm shift that the access to consumer data is something that consumers themselves can decide on. And for the time being, it occurs in the area of payments, so the consumers can decide which other actors shall have access to payments information. But I think in the future, you may ask questions whether that type of right of consumers should be extended to other information that consumers have with banks, for instance, when it comes to whatever their investments, or when it comes to their savings, or when it comes to other kind of information that is not necessary for payments, but that could potentially be a good basis for building other financial services. And that is a question that I think regulators in the future will need to think about.
How easy is it for financial institutions to implement your solutions and strategies?
We try to help with our solutions to accommodate financial institutions to, let's say, implement their strategies or ambitions. What you see is that in nowadays world where data is a keyword, I mean, data is an asset, you hear all these things, data is a gold mine, all these buzzwords and all these words are being said nowadays, but in order to address that, you need a solution to do that. And so with our technology, where our strategy as a company is that we are working with a standard product, but actually we can implement that or configure that in such a way that we have the ability to address a lot of different challenges that our customers, and so strategies that our customers have to address them with one single technology, whether it is a payments world, in the securities world, whether it's for regulation, whether it is for customer experience, for business intelligence, all these different, I would say, strategies they have on their side, we can accommodate with our technology.
And in terms of your actual sort of technology, what is it around your solutions that enables a bank to put forward their strategy? Is it very flexible in terms of future-proofing?
Yeah, so it is one of the things that Fintechs, as we are then being called, have, I think, a big advantage or a big difference compared with the IT divisions of banks, where we are much more agile and much more faster when we talk about new technology. So we have the ability in our technology to work with any kind of format. So talking about, again, the data silos we have in place, wherever the data is located, in whatever format the data is being, let's say, expressed or stored, we can create kind of a single window access to the data, so that even while creating correlations amongst the different data sources and the data elements, we have the ability to actually bring it back to the customer in what way or expectation they have, whether it is in the context of liquidity management, whether it's in the context of a track and trace of transactions, whether lifecycle management, whether it is for compliance, all these different, let's say, use cases can be addressed.
So new technology obviously brings new challenges and new opportunities, one of which is obviously the regulations coming in next year. PSD2 and GDPR. Yep. Can you tell us what SEB are doing to offset some of the challenges and make them more positives, especially when it comes to the corporates?
Yeah, it's interesting how regulation and the whole sound of that and the taste have changed over time. In the past, it used to be, oh my God, what are we going to do with it? And it's only a burden to us. Into that, how can we in fact use that to increase our trust, to actually talk to our customers and guide them through the regulation. And it turns out that they need as much help as we do. So you could say that to be really insightful of the regulation and the effects both on the bank and in the general industry is a benefit to our customers. That is what is one of the advisory parts. How are we guiding them through the implementation of this? And also that in a way it protects our industry and configures it to attack the new world, if you want. Of the technology, so it gives us an arena where we can have a level playing field, and in fact then be able to make the competition about the value rather than the infrastructure, which doesn't add additional value because we all are part of the same. So here banks are really maybe separating into what is a value-driven and what is an infrastructure provider. So we are really trying to navigate this world. But collaboration openness to the new world, and really time to market is what I see is good with PSD2. You could say it's a threat. There might be nibbling out of our traditional business model, but also the enhancement of other parts that we actually provide a huge value, but we've never made that concrete. What is it that we are actually providing? You know, what does it mean to be trustworthy and to be safe? So cybercrime, for instance, is something that it turns out that we can be really good at providing security for our customers. And that has never in the past been something that you just take that for granted, and now you see that there is a difference between one player and the other. There's a lot of areas in terms of regulation that I think can provide value. Another example is where you have SEPA being implemented and everybody's struggling to actually deliver the product. But what we got is a standardized way of formatting the payments, which is based on XML. And suddenly, instead of having, you know, the US with whatever formats there were there and Europe on another platform, we are converging this into one platform where we can in fact talk to each other and give a much better solution, you'd say, for instance, the payment industry, but also other areas. So it's not all bad. It's opportunities in that one as well. So it's important to kind of see the forest for all the trees.
I wanted to hear about big data and the technologies surrounding this and how they're being used to help the industry from a regulatory standpoint.
Well, we're embracing all new technologies. So whether it is AI or chatbots or indeed any new capability, we have to be alive to it. Indeed, we must pioneer it in the Irish market. Our core banking infrastructure, which is an open architecture, allows us to integrate fintech solutions and other technologies so that the consolidation of all of those capabilities delivers the customer experience that we're looking to deliver. So new technologies will be at the heart of that.
Now, new technologies bring new problems. One of the exciting new things actually is happening in the banking industry is regulations such as PSD2 and open banking. Can you tell us what KBC's role will be with those new developments?
We're at the cusp of an incredibly exciting time in banking, as in some will call this the digital revolution. PSD2 is going to enable is an excellent opportunity for customers, first of all, because it will empower them to multi-bank. It'll disintermediate traditional banking services. It will allow for new competition, new entrants, and particularly for digital players. So firstly, PSD2 will be a win for consumers, and it's a very exciting time for digital or challenger banks within that space, because we can position our products and services through a multitude of means.
So a lot of banks are obviously quite intimidated with the regulation. They always come through in the end. But what would you tell them if you were trying to ease their fears or advise them in some way in how to accept GDPR or PSD2 in the future?
At the end of the day, the modern technology has to empower the consumer to be better able to use the services, to get financial services out to more people in more types of population that has perhaps not received those services. It has to enable consumers to get financial services at cheaper cost, of better quality, and perhaps to increase the accessibility and ease of use. So I think it boils down to those very simple questions. So at the end of the day, I think it is a question about offering better products to consumers and doing it at a lower price and making those products more appealing to customers. At the same time, well-functioning financial markets are a public good. That's why we exist as supervisors, to make sure that the markets can develop freely and new ideas can flow at the same time as financial stability is ensured and consumers are well protected. So we have the mandate to make sure that we protect market from those excesses which cannot be taken care of private sector actors themselves. When financial innovation occurs, and this is irrespective of the questions whether supervisors should do something in particular to support innovation, I think we have to come back to our key role and understand that when a new financial innovation occurs, we as supervisors need to A, understand it, and B, figure out if that innovation creates externalities which might be detrimental to consumers or which may be detrimental to financial stability. And in case those externalities exist, we need to ask ourselves if we need to regulate something. And if we conclude that we might need to regulate something, then we need to figure out whether costs of regulation exceed the benefits from regulation. If the costs exceed the benefits from regulation, then probably we should do nothing. If the benefits from regulation exceed the costs, then there is a good case for us to do something to protect consumers and financial stability. It's a very simple kind of intellectual framework, but it's important to keep in mind, where is our role in all of that?
There's so much data out there. How can we use that information to make the industry bigger and better and that much more efficient?
Let's say it has started. We're not at the end yet. What we have now seen or are seeing is that the need for not data, because the data is there, but the need for access to data and being able to do something valuable with the data is already providing big value today to customers. As I mentioned before, it can be pretty easy, the access type of data for regulators, but also we see a lot of value nowadays in projects where actually we are doing life cycle transaction management, and so where the value is not looking at one specific element in a transaction, but providing insight to a large institution about the whole flow of a certain payment, being able to eventually detect anomalies in the processing flow. So that's very important already, and that's based on the as-is data today, real time, of course. And now we are progressing in the area of new technologies, where we're going to talk about artificial intelligence, machine learning, and there we are going to go into the next phase, actually, where you will see that these new technologies, these new algorithms are going to help not only to tell what has happened and to flag out some important information events to a customer, but also to help them into the more predictive area of things. And that is certainly something that we are going to see increasing a lot in the coming years, and that's going to help the institutions to address things like fraud much better than today, intraday liquidity, and so on and so on. So a lot of business opportunities in that sense.
Do you think with the amount of data that banks have on their customers increasing, that kind of level of predictability is becoming more and more accurate?
It's maybe not about more and more accurate, but the thing is that I think that we will see that banks will get much more understanding actually about what they're doing, or what at least customers are doing with them, and as a result will be able to much more target their business onto that. I mean, don't forget that banks today have already to fight against the new entrants, and so I think it's one of the reasons why you see more and more now also collaboration with the fintechs and the financial institutions starting specifically to be able to address new technology in a faster way than what they're used to do. But I think that's going to be the future.
See, huge amount of data out there, and starting to, with you guys, really kind of understand that data both on a retail, on a corporate, on a insurance level. How are you then able to use this to really sort of enhance the end user's customer experience, be they a high net worth individual or the average Joe on the street? How do you guys have enabled that customer experience to be enhanced?
We've done already several things. I mean, basically going from, I would say, a kind of a basic offering with equipped call centers of banks with our technology, where in the previous times a customer would call the call center with a question about a certain payment that they've done, and maybe it didn't appear on their bank statement or whatever question in that sense. In the previous situation, the clerk of the bank and the call center employee needed to actually dig into systems and CDs and whatever to find out the information for that specific customer. It was time consuming, it took a long time, so the customer experience is not fantastic, but the customer has to wait for an answer. Now this has been in certain cases being replaced by our technology, and when the customer now is calling in, it's like, okay, what's your question? And the response is there within a few seconds. So the customer is happy, you can address actually the same problem, but in a much faster and efficient way. So then in terms of a kind of a return on investment is already a very important achievement. So this is only one of the use cases that we've seen with our technology in a very basic type of usage of our solution. we've seen other situations where banks, specifically in the transaction banking space, had situations where they lost, not definitely, but not forever, but I mean they lost some high value transactions in their processing chain, and in the end they only realized when the customer at the end was calling them, say, where's my transaction, sometimes of 100 million and more euros. And of course, when you have such a situation, your customer is not happy, and then there is also, of course, the cost of, you missed the value date and all these kind of things that really are adding to that. What we now also can address with our technology, with our tracking functionality, is really ensure that we can alert people within the bank that such a situation is happening, and they can actually repair it before actually it goes out. So cut-off date is not missed. Customer has no clue that potentially something went wrong, and they got the funds in time. So and that's of course indeed in that type of gain an important benefit you can provide to your customers. And so there are many more in this context.
On the next episode of FinTech Finance, we're taking a look at cybersecurity with FireEye.